on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new accounting is what we call blockchain. It means digital. It means having a almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on. It also raises huge dangers in terms of the balance of power between states and citizens. In my opinion, we're going to need a digital constitution of human rights if we're going to have digital money. But also, this new money will be sovereign in nature. Most people think that digital money is crypto and private, but what I see are superpowers introducing digital currency. The Chinese were the first. The US is on the brink, I think, of moving in the same direction. The Europeans have committed to that as well. And the question is, will that new system of digital money and digital accounting accommodate the competing needs of the citizens of all these locations so that every human being has a chance to have a better life?
Hey everybody, welcome to the Build Young, Grow Wealthy podcast. My name is Walida Cherie. I help busy professionals and entrepreneurs manage, protect, and grow their income to obtain financial freedom. In today's podcast episode, we will discuss the future of FedNow and its potential to expand, future payments, and future developments. Without further ado, let's get into this. First, let's talk about the potential for FedNow to expand and become more widely adopted. FedNow has already transformed the way we transfer money, but what lies ahead for this groundbreaking system? One of the key areas where we can expect to see FedNow expand is its network reach. As more financial institutions join the system, the accessibility and convenience of instant payments will become more widespread. This means that individuals and businesses nationwide can send and receive funds instantly, eliminating the need for traditional payment methods that often involve delays and fees. So we must ask ourselves, as convenient as living in a cashless society sounds, would everyone benefit? Check out this clip from The Economist, which aired on August 23, 2019.
Some people may find it harder to grasp how much money they have without the physical representation of it. Not everyone knows how to use internet banking technology, and people living in remote areas where internet cover is patchy may find they have to drive for miles for their basic needs. And there's another sector of society that relies heavily on cash.
People living in the street don't carry card terminals with them, so it will be very hard for them, well, first of all, to collect money and to pay for things. They will be among the people who suffer the most from it.
If the most vulnerable in our population would be worse off, why would governments push for a digital currency?
Central banks enact monetary policy by exerting control over the amount of money that is created and that is in circulation. And they can do it because they are the only entities that print and create money. The purpose of it is to control the amount of money that is used by the entire economy. In a cashless society, obviously this becomes much harder because money presumably can be created by other entities. And so central banks are actually starting to realize this, especially after Facebook made the announcement that they were going to launch a digital currency. It shows you the extent to which central banks are already thinking about the future of money.
We learned in our first two episodes that FedNow doesn't plan to replace cash, but does it have plans to evolve into a central bank digital currency or CBDC? Let's take a look at the FederalReserve.com official statement. So, what is a central bank digital currency, also known as a CBDC? A CBDC is a digital form of central bank money that is widely available to the general public. Central bank money refers to money that is a liability of the central bank. In the United States, there are currently two types of central bank money: physical currency issued by the Federal Reserve and digital balances held by commercial banks at the Federal Reserve. While Americans have long held money predominantly in digital form, for example, in bank accounts, payment apps, or through online transactions, a CBDC will differ from existing digital money available to the general public because a CBDC would be a liability of the Federal Reserve, not of a commercial bank. So most people have the question of, will a US CBDC replace cash or paper currency? Their official statement says the Federal Reserve is committed to ensuring the continued safety and availability of cash and is considering a CBDC as a means to expand safe payment options, not to reduce or replace them. Has the Federal Reserve decided to create a CBDC? The Federal Reserve issued money and payments. The US dollar in the age of digital transformation as a first step in fostering a broad and transparent public dialogue about CBDCs in general and about the potential benefits and risk of a US CBDC. The paper is not intended to advance any specific policy outcome, and no decisions have been made at this time. The Federal Reserve has made no decision on issuing a central bank digital currency, CBDC, and would only proceed with the issuance of a CBDC with an authorizing law. Testifying before the House Financial Services Committee in March 2023, Chair Powell said a central bank digital currency is, quote, something we would certainly need congressional approval for, end quote. The Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system, and is studying how a CBDC could improve on an already safe and efficient U.S. domestic payment system. With technological advances ushering in a wave of new private sector financial products and services, including digital wallets, mobile payment apps, and new digital assets such as cryptocurrencies and stablecoins, the Federal Reserve and other central banks around the globe are exploring the potential benefits and risk of issuing a CBDC. You can go and look at the rest of these on your own, but it goes into detail about the potentials of CBDCs, the risk, also what are their principles that's helping to guide their considerations, how they're going to protect your privacy, how you can learn more about it or comment on their paper, and also their ongoing technological initiatives and that are related to the CBDC. So the Fed does not explicitly say no to the idea of introducing a central bank digital currency, also known as a CBDC. However, they are admitting that in this current introduction of FedNow, they still have several loops to go through before we see it in action if Congress were to give their approval. Simply put, the potential for the US to create a CBDC is not off the table. Next, let's discuss what the future of payments may look like with FedNow in place. With the implementation of FedNow, the future of payments could see significant changes, such as checks and wire transfers may become less common. Mobile payments and digital wallets could also become even more popular as they can easily integrate with real-time payment systems. As more businesses and consumers adopt this new payment system, we may see a significant transformation in how payments are made and processed. But doesn't a payment system like this already exist? Remember in my previous episode, I mentioned RTP or Real-Time Payment System? It was established in 2017 and has over 250 banks and credit unions a part of its network. Check out this video.
Technology drives a collective need to always be moving faster. The demand for instant action when you need it affects virtually everything, including the way money moves. That's the power of the RTP Network, an innovative payment system that delivers immediate and final payments anytime, day or night. It's a system that enables new products and possibilities for a rapidly growing number of financial, corporate, and commercial enterprises. Because real-time isn't just the new normal, it's the future of commerce. And the RTP Network is the rail to ride into that future. The RTP Network is expanding in volume, reach, and value every week. And no wonder. Supported by the network and their financial institution, forward-thinking companies are introducing game-changing new capabilities, such as paying workers when they need the money, like at the end of their shift, paying insurance claims immediately when the money can help the most, funding merchants for credit card receipts anytime when cash flow is most important, and enabling a more complete bill pay experience, one that provides transparency and efficiency for both billers and bill payers. Today, the RTP network is in full production across the United States, which means your customers could be receiving immediate final payments now when they need them, all day, every day. We invite you to take the next step in innovative payments by connecting to the RTP Network and creating a remarkable real-time experience for your customers.
I'm sure you've heard this saying, if it ain't broke, don't fix it. So what was wrong with the RTP network? Nothing, except it was taking the Federal Reserve out of the competition. Speaking of the Federal Reserve, did you know it is privately owned and not a federal entity as its name suggests? Check out this video I saw years ago on YouTube, but unfortunately, I don't know who the original creator is to give them credit because there are so many clips on YouTube now, but I do still enjoy the accuracy and how comical it is and how it breaks down the Federal Reserve Bank.
Say, Hartman, why am I wearing a burglar bikini top? Because no one is allowed inside the Fed. Not you, not me, no American citizen, no duly elected member of our Congress, not the Supreme Court, not the Supreme Court, not the Supreme Court, not the Justice Department, not the CIA, DIA, FBI, ATF, ATE, NBC, not even GOD. How come the government isn't allowed inside its own building? Government? The Fed is a private bank owned by private stockholders. Do not let the name Federal fool you. This place is about as Federal Express. A private bank? Private? Shh. Best to keep your voice down, pal. In 1910, a secret meeting was held at a J.P. Morgan estate on Jekyll Island off the coast of Georgia. This meeting was so secretive, so concealed from government and public knowledge that the 10 attendees used code names.
I am clearly the richest man, so I should be the one to run the super secret central bank. I own all the oil in America. I'm clearly richer than you will ever be, hula girl. I should run the super secret central bank. You're nothing compared to me, lube job. I shall run the secret bank.
Silence!
Supreme Master Leader, I didn't know you were going to be here.
I'm not. Neither are you.
Oh, yeah, right. He's so smart.
None of you shall run the bank. We have failed in the past because of openness. This time, the key to success is secrecy. The people must believe that they run the bank.
Yes, brilliant. A sneak attack. What's the plan?
We first create panic, then we show them the solution. With our man in office and well-planned timing, we will have our central bank. And so the people think it is theirs. We shall christen it Federal. The Federal Reserve.
Another topic of discussion of how FedNow would change the future of payments is its cross-border expansion. On its release date, FedNow will only be accessible in the US. But like RTP, doesn't a digital cross-border system already exist? Yes and no. So most people have heard of Bitcoin, but Bitcoin is slow and expensive to mine. A company called Ripple came out with a digital currency that was both fast, cheap, and energy efficient that was able to transact cross borders. But in 2020, the Security and Exchange Commission, also known as the SEC, accused the company of selling unlicensed securities. On July 14, 2023, a U.S. judge ruled that RXP was not found to transact illegal securities transactions.
What is the direct impact for your company, Ripple, and for the broader crypto industry right now?
Well, 2.5 years ago when the SEC first sued us, we said publicly that this wasn't just an attack on Ripple, it was an attack on the entire crypto industry. And I think we did see that play out with the SEC getting more and more aggressive in really trying to regulate through enforcement, which we clearly don't think is a healthy way to do it. I think this is a huge win, not just for Ripple, but for the whole industry. I think it really is the first time the SEC has lost a crypto case and really puts the SEC, some of the SEC's narrative and comments that they make publicly about all of these digital assets being securities, it puts that in check, and I think in a very good way. And hopefully it also drives the legislative process, because it doesn't make sense to try to regulate this through enforcement, but rather let's have clear laws about this that allow rules of the road for all entrepreneurs.
So what do you think? Was Ripple a victim of blackmail to take them out of the competition? Last but not least, let's discuss the future developments of FedNow. During this series, we've covered several potential future developments in the world of instant payments that could significantly impact the payment industry. Let's do a recap. Increased adoption of real-time payments. As more businesses and consumers become aware of the benefits of instant payments, we may see a significant increase in adoption. This could lead to a shift away from traditional payment methods that are slower and less efficient. This means cash, checks, and wire transfers may eventually be phased out. Integration with other payment systems. Instant payment systems like FedNow may become more integrated with other payment systems, such as mobile payments and digital wallets. This could make it easier for businesses and consumers to make payments across different platforms and devices. Expansion of cross-border payments. Instant payment systems could also facilitate cross-border payments, which are currently slow and expensive. As more businesses operate globally, there is a growing need for fast and efficient cross-border payment solutions. Two future developments we haven't touched on are blockchain and the integration of other financial services. So let's take a quick look at their future goals. Use of blockchain technology. Blockchain technology has the potential to revolutionize the payment industry by providing a secure and transparent way to process transactions. We may see more instant payment systems built on blockchain technology in the future. At the beginning of this episode, I played a clip from the World Government Summit with Dr. Pippa, explaining the goal of getting all currencies on blockchain. Let me play the longer version of that clip so that you can understand the future of money in more context.
I remember talking to an Australian diplomat at one point about this break between the US and China and said, both sides are going to say, whose team are you on? And he said, our job is to make sure the question never arises. But the question has arisen. And so I think we have to go deeper. And it's not about the US versus China. It's about what underpins a world order is always the financial system. I was very privileged. My father was an advisor to Nixon when they came off the gold standard in '71. And so I was brought up with a kind of inside view of how very important the financial structure is to absolutely everything else. And what we're seeing in the world today, I think, is we are on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new one, the new accounting, is what we call blockchain. It means digital. It means having a almost perfect record of every single transaction that happens in the economy, which will give us far greater clarity over what's going on. It also raises huge dangers in terms of the balance of power between states and citizens. In my opinion, we're going to need a digital constitution of human rights if we're going to have digital money. But also, this new money will be sovereign in nature. Most people think that digital money is crypto and private, but what I see are superpowers introducing digital currency. The Chinese were the first. The US is on the brink, I think, of moving in the same direction. The Europeans have committed to that as well. And the question is, will that new system of digital money and digital accounting accommodate the competing needs of the citizens of all these locations so that every human being has a chance to have a better life? Because that's the only measure of whether a world order really serves.
FedNow plans to integrate with other financial services. Instant payment systems could also be integrated with other financial services, such as lending and investment platforms. This could create a more seamless and integrated financial ecosystem for businesses and consumers. In my opinion, FedNow is warming people up for the ultimate goal of a cashless society, which is to have everyone on the blockchain. So while FedNow makes no claims of adopting this technology anytime soon, it doesn't mean that their future intentions aren't to do so. Overall, the future of instant payments will likely be characterized by increased speed, efficiency, security, and greater integration with other payment systems and financial services. After doing all of my research, my biggest concern with FedNow is privacy and protection from fraud. Though FedNow markets itself as safe and secure, my concern is that if Congress ever gives them the green light, they would have everyone on their platform, giving us no option but to accept whatever they say is best for us. So what are your thoughts? Are you ready to join the FedNow list? Or do you plan to sit out on the sidelines and see how this plays out? Let me know your thoughts. That's all I have for now. If you enjoyed this episode, be sure to share it with your friends. And until next time, I will talk to you later.